Welcome to the Risk Wheelhouse, the podcast where we navigate the ever-changing seas of risk management and technology. Join your hosts, Ori Wellington and Sam Jones, as they steer you through the latest trends, insights, and strategies shaping the future of integrated risk management. Ready to chart a course towards success? Hop aboard and let's set sail into today's deep dive.
Okay, how do you keep up? Seriously, how do you keep up with the sheer speed of change, especially when it's something as critical as managing risk and cybersecurity? It feels like the ground beneath us is constantly shifting, doesn't it? Wait, let's unpack this a bit, because the whole world of risk management technology, it's going through this immense transformation. It's almost overwhelming.
It really is seismic, yeah. And our focus today, it's integrated risk management IRM, how it's being, fundamentally reshaped. We're talking advanced AI, big shifts in what investors are looking for, and yeah, those cyber threats that just keep evolving. The toughest part for a lot of folks in risk isn't getting information, it's finding insights that are truly actionable, that look forward. Yeah. Most of the general reports out there, they just scratch the surface. Often feels like yesterday's news.
Exactly. And that's why we're doing this deep dive today. Our mission really is to give you a shortcut, help you get properly informed by pulling out the key nuggets from some really exclusive analysis. We're tapping into the RTJ Bridge by Wheelhouse Advisors. This is stuff usually kept for, a very specific audience. So you're about to get a sneak peek into what's driving top investor decisions and the future of enterprise resilience.
Yeah, and these insights, they cover some pretty dramatic shifts in software, major investment trends that are really validating this whole IRM market, and maybe surprisingly, some growing vulnerabilities in a place you might not expect cyber insurance providers themselves. We'll also dig into why some of the, let's say, common industry reports might be, missing the mark a bit on who the real leaders are here.
Right. We promised some surprising facts, maybe just enough humor to keep it interesting. We want to make this complex topic clear, engaging, and actually useful. So yeah, you're about to get a really unique perspective on something impacting pretty much every modern business. Okay, let's dive right in. There's a pretty blunt assessment floating around about risk management tech right now. Bill McDermott, ServiceNow's CEO, he recently warned that these advanced AI-centric platforms, they're causing what he called an extinction-level event for older software players. That's a powerful phrase for a CEO. What exactly is going extinct here?
It is powerful, and it highlights a critical truth, really. Traditional GRC vendors, governance, risk, compliance, the ones still stuck on static compliance models, lots of manual processes. They're facing rapid obsolescence. The market's moving clearly towards autonomous IRM. And when we say autonomous, we mean AI-native platforms, integrated systems that don't just hold data. They actively use machine learning. They predict emerging risks, automate policy enforcement, maybe even suggest how to fix things in real time. It fundamentally breaks down those old organizational silos, Yeah. It pushes towards proactive risk mitigation, not just reactive compliance checks. Think of it like moving from a manual spreadsheet to a self-driving car, but for risk.
It's a great analogy, a self-driving car for risk.
Okay.
So these new systems aren't just faster, they're fundamentally, smarter, more predictive.
Exactly.
And it looks like the big money is noticing. You talk about institutional validation, that recent NEVX acquisition led by Goldman Sachs with Blackstone jumping into. That really stands out. This isn't just pocket change. It feels like major institutional confidence in where IRM software is heading. Mm-hmm. What does that kind of huge buy-in from top-tier private equity mean for the wider IRM world, especially for, say, smaller vendors or companies thinking about adopting this stuff?
It's fascinating, yeah. That deal, it really marks a milestone. It shows confidence not just in NEVX, but in the whole IRM sector. As our source, Wheelhouse Advisors, puts it, and this is a good quote, when top-tier investors like Goldman and Blackstone commit at this scale, it's a clear vote of confidence that IRM is no longer a nice-to-have, but essential for enterprise resilience. For smaller players, it likely means more competition, but also a bigger, more validated market to play in. And for companies thinking about adopting IRM, it's a loud signal. IRM isn't niche anymore. It's mainstream. It's critical for modern business ops. It just legitimizes the whole space, draws in more innovation, more talent.
Right. Okay, you also mentioned an unexpected vulnerability.
Are you ready to see risk management in action? At Wheelhouse Advisors, we've launched a new YouTube channel dedicated to integrated risk management. You'll find quick explainers, insights from our IRM Navigator research reports, highlights from the Risk Journal, and conversations from the Risk Wheelhouse podcast. We're covering the topics that matter most to executives and risk leaders, from AI governance and cyber insurance to operational resilience and regulatory change. Every video is designed to help you anticipate risks, adapt with confidence, and build resilience in a digital-first world. In our first video, we explain how ISO 42001, the EU AI Act, and the NIST AI Risk Management Framework can work together as a unified playbook for AI risk. Subscribe today at youtube.com/@wheelhouseadv and get the latest insights delivered directly to you. That's youtube.com/@wheelhouseadv. Subscribe now and stay ahead of the risks that matter most.
Ability in cyber insurance providers. That seems like a worrying paradox. The companies meant to protect others are becoming targets. The Allianz Life data exposure you mentioned is a stark example. Wait, so even the insurers are vulnerable. How does that happen? Their whole business is risk mitigation.
It really is a paradox, isn't it? Like you said, the fire department catching fire, the Allianz Life breach, which was a huge vendor-related data leak, it just starkly highlights these critical gaps that even providers can have. We're talking about gaps in their own third-party risk management, their cybersecurity governance, maybe even internal regulatory compliance. Our research actually tackles these vulnerabilities directly by aligning IRM domains, things like enterprise risk, operational risk, tech risk, GRC, with strategic PROC objectives.
Okay, PROC objectives. You dropped that term in. Can you unpack PRC for us? What does it mean and why is it so crucial, especially for insurers?
Absolutely. So PRC stands for Performance, Resilience, Assurance, and Compliance. For an insurer, performance could be about using real-time risk data to allocate resources better, be more efficient. Resilience is pretty straightforward. Can they withstand an attack and keep operating? Business continuity? Assurance is about having automated audit trails, verifiable controls for the regulators, super critical in their heavily regulated world. And compliance is, meeting all those legal and industry standards, which are always changing. So by proactively aligning their IRM using this PROC framework, insurers don't just manage risks better and reduce their own exposure. They can actually position themselves as genuinely resilient market leaders. It's really about practicing what they preach.
Makes sense. It sounds like a much more holistic view is needed, especially when the stakes are that high. And speaking of approaches, let's talk about how the market actually evaluates these companies. You suggested some industry reports are kind of missing the mark on the IRM vendor landscape, like IDC's latest MarketScape for GRC. That's a strong claim suggesting a major analyst firm is off target. Is there any situation where their current evaluation might still be useful, or is it genuinely a miss?
Well, complete miss might be too strong. It's more like they're evolving too slowly. They haven't quite caught up with how fast the market is changing. IDC's latest GRC MarketScape, for example, it still uses definitions and criteria that just feel outdated for this autonomous AI-driven future of IRM we're talking about. And this, it can lead to some questionable conclusions about who the real leaders are. By contrast, the research we're drawing on, the IRM Navigator series from Wheelhouse, it uses very clearly defined maturity curves and functional IRM layers.
Maturity curves and functional IRM layers. Okay, sounds important, but maybe a bit technical. Can you give us a quick sort of conceptual breakdown? Why is that approach better?
Sure. Think of maturity curves like levels in a video game for risk management. You start at basic compliance, level 1 maybe, and you aim for higher levels, proactive strategy, resilience, that sort of thing. It's a roadmap for how companies evolve. And functional IRM layers. That refers to the distinct capabilities like threat intelligence, automating controls, risk analytics. So this lets us assess vendors not just on if they have a feature, but how deeply and effectively they integrate these functions. Makes sense?
Yeah, okay, so it's more granular.
Exactly. It's much more granular, more sophisticated. It helps buyers pick vendors that really align with their strategic goals, not just someone sitting in a generic leader box that might lump together old legacy systems and cutting-edge AI. As IRM moves towards this autonomous future, those simplistic charts, the ones without strategic depth, they just don't cut it anymore. It's like trying to judge a Formula One car based on its paint job. You miss what's under the hood.
Okay, so wrapping this up a bit, what does this all mean? For you, the listener, and just the broader risk landscape, we've hit some major points. That extinction-level event for legacy GRC, the huge validation of IRM from big investors like Goldman and Blackstone, the critical vulnerabilities even cyber insurers face, like with Allianz Life, and Yeah, the limits of some traditional analyst reports. It's quite a lot to digest, right?
It absolutely is. And the bottom line, IRM isn't a nice to have anymore. It's essential. Essential for enterprise resilience. It's being driven hard by AI, by data-centric approaches, breaking down silos, pushing for proactive mitigation. And the kind of research we discussed today, using those maturity curves and functional layers, it offers a much more sophisticated way to assess who's doing what, giving you a deeper, more accurate picture of what really counts in this space.
And that really highlights the value, doesn't it? Getting access to distinct insights like these. It's a sharp contrast to a general market reports that can sometimes feel like they're just repeating what everyone already knows. We really hope this deep dive has got you thinking, considering the implications for your own understanding of risk and tech, whatever field you're in. It's a complex world out there, and staying ahead is pretty crucial.
Which really brings up an important question, I think. In a world where even the experts meant to protect us are targets, like the insurers, and where widely accepted reports might miss critical shifts, how do you critically evaluate the information you consume? How do you make sure your insights are truly forward-looking, truly actionable, especially as we head towards a more autonomous future?
That is a powerful thought to chew on. We definitely encourage you to reflect on how these pretty profound shifts in integrated risk management might connect to your own work, your own interests. Hopefully it sparks some further curiosity and exploration.
That wraps up another episode of the Risk Wheelhouse. Thank you for spending time with us at Wheelhouse Advisors today. We hope you found the conversation insightful and actionable for your organization's risk strategies. Don't forget to subscribe on your favorite podcast platform, whether it's Apple Podcasts, Spotify, or Amazon Music. If you're looking for more in-depth analysis and thought leadership on risk technology, be sure to visit the Risk Tech Journal at therisktechjournal.com. It's your go-to source for comprehensive articles, expert interviews, and the latest trends shaping the industry. Subscribe today to stay informed. For any inquiries or feedback, please contact us directly at info@wheelhouseadvisors.com, or feel free to connect with us on LinkedIn and x.com and share your thoughts or suggestions for future topics. Visit wheelhouseadvisors.com for more information and resources. Thanks again for joining us. Until next time, navigate wisely.